Hey everyone, welcome to The Explainer. Today, we're diving into something absolutely wild happening right now in the financial sector. We are witnessing what you could really only call a fintech Freaky Friday. If you've ever seen that movie where the characters wake up in completely different bodies, well, that is exactly what is happening with some of the biggest names in finance right now. These companies are stepping way outside their traditional lanes and trying on completely new identities.
Okay, let's dive right into this. We're literally watching financial companies cosplay as entirely different industries. I mean, think about it. We've got brokerages that are suddenly acting like Silicon Valley venture capitalists. We have personal finance apps behaving like massive sneaker brands. And we have crypto companies buying up traditional banking infrastructure. It is a complete body swap across the board. And honestly, it tells us a lot about where the future of money is heading.
So, here's our roadmap for today. We've got 3 prime examples to prove this. 1. Robinhood plays VC. 2. Albert courts the Lakers. And 3. Ripple buys the plumbing. Let's get right to it.
Starting off with case study number 1, Robinhood plays VC. The magic number to focus on here is 200 million. Robinhood's Ventures Fund 2, or RV2 for short, recently kicked off its IPO roadshow. They're looking to raise up to $200 million by offering 8 million shares at roughly $25 a pop, targeting a mid-August listing on the New York Stock Exchange. Now, a traditional brokerage raising funds, not exactly breaking news, but their pitch to everyday folks, that is where things get completely wild.
Get this, the pitch is giving everyday retail investors exposure to a portfolio of 80 early-stage private companies. And we aren't talking about just random garage projects. Most of these are tied to Y Combinator. If you follow tech, you know Y Combinator is absolute legend status. Since 2005, they've backed over 5,000 startups with a combined value of $1.3 trillion. That's trillion with a T, minting 100 unicorn companies along the way. Robinhood is basically handing out golden tickets straight into Willy Wonka's factory. Sounds pretty incredible, right?
But, yeah, there's always a but. Here is the catch. Robinhood might be unhooking the velvet rope for us, but the bouncer is still demanding a massive cover charge at the door. So on one side, sure, you get that golden ticket access to 80 Y Combinator startups. But on the flip side, the tour guide is taking 2% of your money every single year, plus 20% of any gains you happen to make. Make no mistake, you are paying top-tier premium venture capital fees here.
And it gets a bit more complicated when you look under the hood. This fund is structured as a closed-end BDC, or business development company. What does that actually mean for you? Well, it means your shares can actually trade at a discount to what those underlying startups are truly worth. Plus, there's zero guarantee of seeing any dividends along the way. Oh, and if we look at their track record, it's not exactly flawless. Actually, scratch that. Their predecessor fund, RVI, was priced at $25 back in March, and it traded below that price on day one. So you're wearing the shiny VC badge, but you are the one carrying all the structural risk.
Moving right along to case study 2, Albert courts the Lakers. So, if you haven't heard of them, Albert is an app that manages money for over 20 million users, mostly using AI-driven budgeting, saving, and bill pay tools. Pretty standard fintech stuff, right? Well, they just made a massive splash. They are the brand new official jersey patch partner for the Los Angeles Lakers. They snagged that super coveted upper left chest real estate on all 4 Lakers uniforms, actually replacing BBGO, the Korean food brand that had the spot since 2021. And this deal, which they landed through Excel Sports Management, is Albert's very first NBA sponsorship. Now, I want you to notice the stark contrast in strategy here when we look back at the ghosts of fintech past. We all remember the absolute hubris of the crypto boom, right? Companies like Crypto.com slapping their name on the Lakers' actual home arena, or FTX doing the exact same thing down in Miami right before imploding spectacularly. Albert's play is a completely different beast. It's way lower key and way lower risk. A chest patch definitely isn't a stadium naming right, but it's on a team that essentially acts as a global walking billboard, no matter their win-loss record.
Albert absolutely isn't going for that one-off, flashy moment. The real wager here is that budgeting app loyalty can be built the exact same way sneaker brands built theirs. They want sustained visibility. It's a much slower, calculated flex, rather than dumping millions into one Super Bowl ad and just praying it works out. They're trying to weave their brand directly into the daily cultural fabric of their target audience.
All right, on to our third and final case study. Ripple buys the plumbing. Honestly, this next move feels straight out of a heist movie. It's like watching Danny Ocean assemble his specialist crew in Ocean's 11. Ripple recently announced strategic investments in 2 UK-based firms to take over the totally unglamorous but absolutely essential plumbing of capital markets. First up, they bring in Xylo to handle record keeping, basically tracking the who owns what for asset managers. Next, they add Liquido, the muscle handling the issuing and moving of tokenized assets. And then they tie the whole operation together with RLUSD, Ripple's own stablecoin, which acts as the cash settlement leg for these trades.
And this brilliantly illustrates their strategic logic. Both Xylo and Liquido are regulated by the UK's FCA. By bringing them into the fold, Ripple is making sure that tokenized assets can actually function as usable collateral in the real world, not just sit there as some fancy digital certificate gathering virtual dust. This builds right on top of their existing tie-ups with heavyweights like Aviva Investors and Franklin Templeton, plus their integrations with DBS. They are quietly building a highly functional, fully regulated ecosystem right on the XRP ledger.
So what exactly is the vault this Danny Ocean crew is trying to crack? Well, it's not a casino in Vegas. It's the global fund administration industry. And that industry sits at a staggering $100 trillion. That is the boring, everyday back end of traditional finance that actually keeps the world spinning. And Ripple, they want to own the pipes. Now, to put that into perspective, XRPL currently has about $368 million in tokenized real-world assets. Compared to the broader market, especially giants like Ethereum that are casually sitting in the billions, yeah, it's basically a rounding error. But here is the massive takeaway. It is growing. Every single time Ripple buys another pipe fitter or lands another strategic deal, they inch closer. They are playing a very, very long game here. Let's bring it all together now in Section 4, the future of finance.
So we've just analyzed three completely distinct, honestly pretty unusual bets today. Robinhood is betting that retail investors want to play venture capitalists so badly that they'll swallow premium fees just for the privilege. Albert is betting that a budgeting app can build deep, sneaker-level brand loyalty just by slapping a patch on a Lakers jersey. And Ripple is making a massive trillion-dollar wager that the future of Wall Street's plumbing will inevitably run on XRP rails. That's three totally different companies, completely stepping outside their traditional lanes to capture the future.
The traditional lines in financial services, they aren't just blurring anymore. They are being entirely erased. Brokerages are acting like VCs, apps are trying to be lifestyle brands, and crypto is becoming the new bank infrastructure. Which leaves us with one incredibly provocative question to wrap up on. In this Freaky Friday financial landscape, who gets to touch your money next? Seriously, think about that next time you're scrolling through your financial apps. Thanks so much for joining me for this explainer, and definitely keep your eyes peeled for the next big body swap in finance.